Welcome everyone to our panel discussion entitled Meeting the Technology and Data Challenge, where we will be exploring some of the latest trends and themes on data collection and analysis in financial services. As Ian said, I'm Colin Leopold. I'm the Head of Research at Private Equity Wire and delighted to be joined by three experts, each with their own perspective on things, who will be sharing their thoughts for the next 45 minutes. So before we get into some questions, maybe we can start with some intros. Mark, do you want to?
Okay, I'll go first. So my name is Mark Rowe. I'm an independent consultant, having worked with Partners Group for over 22 years, 13 years of which then as a partner. Partners Group then being the global private markets investment manager, where I sort of specialise then in accounting, business implementation, also then to do with process management and various different data technology projects.
Yeah. Hi, I'm Chitra Bhaskar. I'm the Chief Operating Officer of Intertrust, and I also run the global funds business. Been doing that for so many years and probably held this title for longer too. So nice to be here. I'm happy to chat up not only in the panel and subsequently thereafter. Over to you.
Good evening, Iron Clunis. I'm a director at BlackRock. I'm responsible for sales across EMEA for our private markets data and analytics business. Been involved in fintech in various different guises for the last 15 years or so, previously with Moody's Analytics and Fidelity Information Systems as well. Very nice to be here.
Perfect, thank you, Aaron. Right, so to kick things off, it'd be great to set the scene a bit, if that's okay. Data integration is a challenge probably for many people in the audience. Systems often don't speak to each other. Legacy technology can be difficult to build upon. Mark, maybe we can start with you. What are some of the risks of relying on legacy technology, and how far along in the transition do you think most of the firms are really?
Yeah, I think what's actually happened is that a lot of companies have taken a best-in-class approach rather than a front-to-back solution, which has meant then that they've got multiple systems. And of course, by having multiple systems, it means then you have duplicity of information. So having then that duplicity of information, how do you then merge that together? So there's a need then for a data management system. Then once you have a data management system, then okay, well, what part of that information then is the golden record? Once you've then had that information, then it's a case of, okay, in one system you have jurisdiction, and in another system you have country. So how do you then equate some of those? So then you have to have a business glossary. Then once you've got a business glossary, then you start looking at reporting. So then you've got to have integration, and once you've got the integration, then you have to sort of build various different reporting systems over the top of it. So there's a lot out there that companies have to handle currently, but I think that's what a lot of people or a lot of the problems that people in the audience then this evening then are probably facing.
Perfect, thank you. Chitra, is that your experience? What's the main challenge with legacy technology at the moment, do you think?
And add on to that, the fact that the world's significantly growing by mergers and acquisitions, and you bring in companies with different technologies, different footprint in what you have, and then again, getting them all together is a lot cumbersome activity, so you tend to operate in multiple different pieces of technology, and that adds to the complexity of data. Not to mention the asset classes that have emerged, the kind of business operations that have emerged have all been changing, adding more and more data incrementally, which tend to sit in different places, magnifying the complexity.
Perfect. Iron, maybe you could give us a bird's eye view on things, I guess how operating models are changing really with you to Chitra and Mark's points.
Yeah, I think I'd echo a lot of the comments the panelists have made. Definitely we see an appetite from our clients to simplify operating models and streamline where appropriate. I represent BlackRock, and BlackRock acquired eFront back in 2019. One of the primary reasons for that was to try and simplify the operating models of our clients that were investing across both public and private assets. As we've rightly said, there's disparate systems, and let's be honest as well, a lot of Excel sheets flying around. So a lot of our discussions now are about how do we simplify and streamline operations to provide those efficiencies, as our clients are being asked to do more with perhaps squeezed margins and squeezed management fees as well.
Yeah, perfect. Thank you for that great answer. I'm glad you mentioned eFront, and I guess the role and influence of third-party providers is growing increasingly. But many larger firms are also developing their own in-house bespoke approach. Mark, maybe I'll come back to you. Is there a one-size-fits-all to some of the problems that you mentioned in your first answer? How is outsourcing developing with some of those problems as a solution?
Would you like the short answer or the long answer?
Give us the long answer. We're on question 2. So.
The short answer is no. So I think what happens is that it very much depends on the company itself, what its strategy is going forward, what is its knowledge, what's its experiences. If you've got a particular fund where the founder, one is a marketing specialist, one is an investment specialist, they're probably going to outsource the operations because they just don't have that skill set in-house. I think, as being said, a lot of companies also sort of rely on Excels to try and get the information together. So small firms can look at it in such a way of, at times they don't know the strategy and what sort of data they want to collect. So what happens is they tend to do it themselves to start off with, to try and understand what they want, what they need, and then to take it forward. There are other smaller companies then who will, as I said, just don't have the skill set in-house, and as a result then decide to completely and utterly outsource it. And then on the other side of the spectrum, then you have large companies who look at it, and depending on the size of their funds, the number of investors, who actually either turn around and go, look, I've got to have such a large operations team in-house that it is just not conducive. So what they tend to do is they look for partners, they look for co-sourcing, somebody who they can actually sit down with, like for instance Intertrust. And it's a case of, okay, well, let's look at what the various different teams are best at, are good at, and they'll actually then build a solution together with the likes of the data warehouse, the reporting, looking at helping each other with various different solutions. And if you look at the medium-sized companies, they're somewhere in between. Yeah. So I think that's sort of mainly where most people are. Yeah. I don't know if the
Yeah, I would tend to agree, right? So I think the larger players do work with the combination of outsourcing, co-sourcing, and in-house work, and therefore the best way to harness data is to focus on data warehouses, and because people see data differently and they interpret data differently, which goes into their either investment or decision-making life cycles. They tend to probably build that to some extent internally, but they could procure the data from multiple other vendors or outsourcing companies. That's probably what you're building out in some way.
Yeah, I'd echo that. I mean, from our perspective, BlackRock is a user and a provider of our technology. There's a philosophy that we build first and buy second. But having said that, clearly the acquisition of eFront in 2019 should tell this room that building from scratch a private markets operating model is a difficult thing, right? BlackRock have thousands of developers and very deep coffers, and I know that they certainly embarked on that journey before the acquisition, but they also decided at a certain point in time that it was faster time to value for our clients to actually make that acquisition a reality in 2019. So completely agree. I think the bigger firms do have a focus on in-house development, but also the smartest firms acknowledge where they don't have the expertise and they don't have perhaps the knowledge necessary to do that in internal development, which is where we see partners stepping in to fill that void.
Yeah, and that's a great answer, but within eFront, for example, that integration journey is obviously still in the early stages, right? So that's a long, long way to go.
Yeah, absolutely. We're still integrating. I think we're proud that we launched the first integrated product 12 months after the acquisition. So we brought to the market something called Whole Portfolio View, which allows our clients to do public and private market performance and analytics on one place. That was nice. It's about integrating private markets data into Aladdin. But the journey hasn't stopped. There's still more to do from a kind of ABOR perspective, from a back office perspective, and that's still very much in transit.
Perfect.
And I think the other side as well is, the system itself is constantly developing as well. So certain service providers will have an alternative system that maybe specializes in that particular area.
Yeah.
And then eFront then comes along and says, oh, by the way, we've now designed or we've improved our system that can actually now do that. So it's then sitting down with the existing service provider that you have, but also then eFront as well, and saying, okay, well, how do we transition the data from the old system into the new system?
That's a really good point, actually. And another point on operating models is we're increasingly seeing a need to open up operating models and have much more bi-directional integration with other service providers and asset servicers, custodians, and so on. We've launched some initiatives called Provider, which is all about integrating those data flows between asset servicers and perhaps in-house technology.
Yeah.
But I think this is common across the board with the rise of APIs and microservices. The need now from a technology perspective is to have open architectures where you can pull in data from various different sources.
Yeah. So that you actually have your business glossary or whatever.
Exactly.
And that's another driver, right? If you're coming off legacy technologies, which at the starting point, the APIs and the ease of data transfers are not so it's not permitted very easily. So people are now looking to do what change they can make to be able to share and receive data. So that's a big theme and problem out there.
There's a lot of trust involved there, right? In terms of that dialogue, I guess both sides are evolving at the same time. Perfect. Okay. I guess moving into technology for a minute, lots to keep on top of here, from AI to machine learning to blockchain. Chicho, maybe if I can come back to you. Moving away from data and onto technology, do you feel businesses are really aware of what's available to them at the moment and maybe some of the potential competitive advantages they could be exploiting?
Yeah, I think it's significantly come a long way from these buzzwords started appearing in the marketplace, whether it's on the forefront is the investment management piece, where a lot of platforms are out there, which is auto balancing portfolio and investing, right? We also have, ever so often a new company come up. There's a company that looks at how do I enhance or quicken the banking or an account opening process by being able to read the documentation and interpret them using AI. Similar things in the loan world. How do I do that? And then move across into the place where you're running AML, KYC, and you're running stuff. Then machine learning obviously helps you to look at what data you have, and maybe get towards predicting as you accumulate more and more data. So there's a lot of trends in multiple parts of the industry that you see. People are adapting. Blockchain's becoming a big concept. We're talking about collaterals. We're talking about settlement, and the JP Morgan's done a lot of headway in those areas. So there's a lot of examples. But however, say that you see more of machine learning and AI in the front end part, and blockchain, it's around. It hasn't become a startling, differentiator yet. Tokenization, breaking down real assets and private assets into retail pieces. I think that's starting. I think BlackRock launched one fund recently, if I'm not.
With Coinbase, yeah.
Yeah. So multiple areas where this technology is getting adapted.
Yeah. I mean, I was talking to someone in the audience earlier who's working on AML technology at the moment. I wondered how firms are being able to keep on top of it in terms of these new developments, right? There's something new happening every day or every week.
Absolutely, yes. Yeah. And the blockchain and ML are two different directions of what we do. Yeah. So it's about the quantity and the quality of data that you have that machine learning can even deliver.
Yeah. Mark, maybe you want to offer your experience in terms of what's been going on at ground level. Have you seen any solutions that have been brought to bear and maybe been transformative to businesses or helped to push them along?
Yeah, I mean, I think building on what Chitra has been saying, a lot of cases, in order to be able to automate these sort of things and use AI or machine learning, you have to have a very standardized process. I've seen it in the case of, you can use AI on invoices where you have large volumes of transactions, where you can actually then get systems then to read the various different parts. So you don't have somebody, if you've got very many different systems, you don't want to have somebody putting it into the accounting system. You don't want to have somebody then putting it into the banking system. You don't want to have somebody then putting it into your invoice records. So the more that you can integrate your various different systems and be able to look at that. But yes, certainly automation requires then standardization. I think you can also see benefits as well if you standardize your accounting system, where you can sit down with your auditors, and what happens there is that they can then go in and look at your 200, 300 products or whatever it is and say, hey, look, your bank accounts are everything between account number 10,000 and 20,000, and therefore it's a lot easier then for them to be able to audit. But I think picking up as well with what Sheetra was saying in terms of blockchain, I've also seen a case whereby you can use technology for security purposes. So, in order to be able to cut down with fraud, you can actually then turn around and say, okay, well, each time you issue a capital call notice, you can put it into blockchain, so that the investor then, once they receive the capital call notice, can actually then determine whether or not that is a legitimate capital call by actually then going into blockchain and saying, excuse me, but is that a valid capital call notice that has actually been sent? Should I actually be paying this, or should I be having a whole load of thoughts around that side? I think you also mentioned some specialization. I mean, there's companies as well then which will look at structure charts. They look at the equity side rather than the investment side. I think that's an area where eFront is very good, is on the investment side, but also then looking at the investors and looking at the structure chart and looking at how you actually build that. So I've seen a particular case there with the Luxembourg-based company called Alltrux there. You also mentioned then sort of the AML, where you can actually also have systems whereby somebody will actually complete the various different forms online, and then the system will actually then come back and say, has that been correctly completed first, which makes the whole AML process a lot more efficient, because otherwise you constantly have toing and froing that says, okay, well, your W8 Ben form was filled out incompletely, or your CSR CRS form was incorrect. So I think the more way you can bring the technology closer to the client and try and help them on those sort of governance issues, I think it will certainly help.
Yeah, and there's a lot of the examples you gave. Are they still quite early stage, or are they close to kind of hitting critical mass? Like, how far along?
I think I'm going to say we're in early end, but it's far away from it. Well, you're being evolved into the banking is probably the most far ahead in any of this, right? So the rest are evolving. The private capital would be far behind.
I think they're just examples of what certain people have actually done, but Sheetra's completely
the adoption takes more time.
Aaron, maybe you want to give some thoughts on that in terms of what you're seeing. Anything people are missing here in terms of maybe quick wins, low-hanging fruit?
Yeah, so I agree with the panelists. Automation is critical to our business and to our clients. We've spent a lot of money in R&D in terms of building out natural language processing technology to automate things like quarterly reports and cap statements and things like that. There's some subtle differences between things like OCR and natural language processing, and depending on which way you go, sometimes you lose the benefit of the automation that you're trying to implement just by taking a slightly different route in terms of the technology. And that's one thing that we try to kind of warn our clients about. It's like, of course, we're trying to automate and we're trying to make ourselves more efficient, but automation for automation's sake is actually counterintuitive. In a private markets context, though, I think a lot of the R&D has all been about how do we take data from documents, okay? But if we kind of jump ahead a little bit, if the document ultimately is the source, I think this is our big constraint in private capital, right? It's about how do we get the data out of that document and much more into straight through processing through systems. That's when we're really going to see advances in technology and real efficiency, as opposed to being able to read 300 cap statements in 5 minutes.
100%, yeah, no, great answer. I think your point about automation for automation's sake is a great one. On the natural language processing, how is that being brought to bear? Or I guess a more difficult question is, how do you measure success on that? Is it a long run?
Yeah, so we have a AI lab based out in Palo Alto. We built this technology in conjunction for our own GP business to transform things like quarterly reports and capital account statements. Because we see a lot of them and because we have to service a lot of clients, it just makes sense to try and get rid of that PDF traffic. We're excited about the results in terms of accuracy. As you mentioned, we think we're about 90% accuracy in terms of the transformation. But just to kind of temper the enthusiasm, we don't ever envisage on that piece a kind of straight through processing without any human intervention. You still need people to train these machines, you still need people to validate and so on, which is why I say really I think the biggest win that we could have as an industry is to kind of get beyond the document. If we get beyond the PDF, I think we're going to see real operational improvement.
Yeah, great answer. Just in terms of the measuring success, Chitra or Mark, do you see this as a sunk cost in the short term in terms of investment on the technology side, or?
Yeah, in a manner it is an investment.
Yeah.
I think if you get that right, the operating costs over multiple years will definitely pay back.
Yeah.
But more than that, you should focus on the fact that you're more efficient, error-free, customer-friendly, get closer to the customer. These are very clear advantages, could even be differentiators between service providers, between investment banks, funds. They could use them as an advantage to sell the product much better to whomever is their customer community. So multiple benefits to come up.
Definitely.
Yeah, and I think, as was said, a lot of this technology is being seen as being as part of the process rather than the entire process.
Yeah.
And I think that at the moment is good insofar as it's you're able to see then this technology advancing, but it's only replacing certain parts of it, and therefore you cannot have the full efficiency until, as you say, you have the full throughput.
Yeah. The point about technology being a differentiator is a good one as well, though, right? We've seen that with tokenization for sure, certainly, right? Yeah.
I mean, it'll certainly help, and in the case of volume, that's where you actually have it. The problem then comes around then with the complexity. And that's where, as the various different firms, they have to find a way of having, taking some of that particular complexity, making as much of that as standardized as possible, but having a business implementation side of things that says, okay, well that is our standard process, rather than actually redesigning a completely and utterly different process for this more complex. What happens is we will add certain steps, and I think once more and more of that actually then happens, then it will then happen with the help with the efficiency.
But it's the right balance between what you want to automate and what is going to be difficult to automate, and have means to handle both, but still to get the data meshed up at the top layer. So everything will never get there, considering the continuous innovation in investment management and way businesses have evolved and continue to evolve.
Yeah.
It's always chase it by the tail. That's going to give it.
Yeah, big challenge. Perfect, thank you for that. Moving on to compliance, which is obviously a big driver for many businesses, probably more so than value creation in many ways. We touched on legacy technology in our first question, but I wondered if there's a wider point here around keeping systems secure, meeting the requirements of investors, reporting. Teacher, maybe you want to take this one in terms of, I guess, regulatory changes. Who is the best referee here, and who should make sure the rules are being followed within the firm?
Absolutely. I think it begins with the fact that complexity is multiplying and constantly increasing, whether it's regulatory, business operations, structures, and investment destinations, or loan structures that are all happening around the world, which then really leads to what's the knowledge base to make sure everybody's on the right side of the rule set, which is constantly evaluating, and it's open to interpretation too, depending on what you're doing. And every day there's a new story that's on the wrong side of what's there. So there's absolutely a need for a referee, and that comes from in two ways. Obviously an internal compliance group which is constantly educating itself, and two, service providers, right? And we speak about ourselves as gatekeepers, or our company which enables responsible growth. And in that construct, we see the responsibility to make sure that we kind of help being that referee for our customers in their activities, whichever area it might be, to make sure that they are on the right side of all these rules. So that's going to be a constant need, and it's an investment from all directions to be in the know-how and learning.
Yeah. And I guess there's a budgetary limitation as well, right, to a certain extent?
It is cannot deal with budgetary limitations on that. It's something that you cannot wish away from learning. But yes, it's the ability to stay in pace with all of this and interpret. And suddenly things change which have a retrospective effect, so you need to start looking at your whole entire business in a different way.
Yeah.
So it does bring a lot of stress on
And, and I think
financial resources.
I think that's where service providers can actually help, because very much a company will put processes and procedures in place and consider it in terms of its own business and how it believes it should respond. I think service providers, because they're looking at multiple clients, they can actually then bring in, but
Best practices.
don't forget this particular part, or if you stray into this particular area, then this is an area where you have to be careful of. So I think with sort of service providers like that, they can actually help, and that's why, as I was talking about previously, this co-sourcing, this partnership, where a number of different firms then working together saying, okay, well, for us it works perfectly, but then they stray into a different particular area, and maybe, yes, they don't have the internal compliance knowledge or experience. Companies, for instance, like that Intertrust, then can actually turn around and go, well, we have 6 other clients who hit this particular problem, and this is how they solved it. So therefore, a company is then not trying to re-engineer a solution, trying to reinvent the wheel, because it's already been done centrally then by a service provider.
And I will affirm that, because we see that from the largest clients who have enough that they do and focus on that, but they constantly ask us, what do you see with peers of ours, and what are the best practices you think we should follow? It's constant and consistent, and it's particularly coming from the largest players. So they're craving to learn. Are they missing out on something in this completely evolving environment? So.
Definitely.
Because the last thing you actually want is to go in one particular direction, and then realize, because you're the trendsetter, to then find out that the rest of the market has gone in completely and utterly different, and you go, okay, now I either have to try and explain it to clients to tell them why we've gone down this particular route when everybody else has gone down a different route, but once you then have the best in class, once you have providers then, for instance, like eFront, then who actually come along and they find a particular solution that the rest of the market is then using, then you have to actually go and unwind it, which of course then causes more costs.
Yeah, it's a great point actually, because I guess this sharing of best practice is going to represent a leveling up for everyone, right? To a certain extent.
Absolutely.
Aaron, did you want to?
Yeah, I'd agree again with the panelists. I think from a compliance perspective, one of the key things is about data lineage and understanding where data is coming from, who's approving data, what are the workflows around making sure data is consistent. To the point I made at the start, if we see organizations that are too Excel heavy, they might come under a lot of scrutiny, certainly from an auditor perspective. But I think, broadly agree with the panel, it's about making sure that you have the right infrastructure in place.
Yeah, definitely. Excel's done for them.
It's a great tool.
And it continues to rule.
Perfect. We're having a lot of agreement on the panel, which is good, but we might have some disagreement on the point of ESG potentially. But talking about reporting and compliance, we really need to touch on that. And it's an increasing consideration for, I'd say, every firm really. And third-party data providers and platforms have rushed into the space over the past 10 years. Aaron, maybe I can come back to you because you've got a great lens across private markets in that respect. I know it's really difficult to generalize on ESG, people do, but do you find we're reaching some point of tipping point there in terms of how firms are measuring data and meeting that challenge?
Yeah, so I was at a conference with Steve Schwartzman about 6 months ago, and he said it's going to be the one thing that changes how private capital works going forward. I think this industry is on the precipice of a paradigm shift because of ESG, and I don't just think it's localized to this industry, I think it actually applies to lots of other industries as well. But if we think about the dynamics of really what's involved here, we're talking about operating in a very data-poor environment. When you have regulations that come along, like SFDR, that are going to now ask private capital managers to request from their portfolio companies Scope 1, Scope 2, Scope 3 emissions, energy consumption, water consumption, gender diversity pay gaps, this type of information. Firstly, I think the first question is, are those portfolio companies sophisticated enough to even report that information in the first place? So it's very clear that we're operating in a data-poor environment, and we thought a lot about, okay, well, if we're at the start of this journey, what can we do to help our clients kind of navigate and diligence assets from an ESG and sustainability lens, understanding that their portfolio companies or their general partners might not have all of the information to hand. So we're using a combination of external data and internally supplied data to try and put together a ESG and sustainability framework to help our clients measure and manage risk, which is a combination of proxying data points to publicly available sources. It's about using things like AI and ML to scrape publicly available sources and look for adverse indicators about portfolio companies and their supply chains. If they're using, child slave labor or whatever it is in the supply chain, having an outside-in approach to recognize and identify that, as opposed to waiting for your portfolio company to tell you that, is probably a sensible thing. But then also, on the flip side, talking about more regulatory data sets, providing advice and help to general partners and portfolio companies about what steps can they take to measure things like their scope 3 emissions, or to measure some of these data points that are going to be increasingly important. I agree with Schwartzman. I think managers and asset allocators are obviously going to be looking at track record and performance, but they're increasingly going to be looking at sustainability risks and exposures. Climate risks for real assets is a huge one, and how that plays into valuations, I think, is going to be really interesting over the next 10 years or so. So I think we're at the start of that journey, and we're spending our time trying to help that community trying to figure out kind of the best way to monitor it.
Yeah, great answer. In terms of potential data points, you mentioned the balance between internal and external data. There's always a regional bias there, or some kind of difference, right? Do you think that still has some way to play out? I guess US versus Europe, climate versus gender, those kind of things?
Yeah, exactly. So clearly we see differences between continental Europe, between North America, between the Middle East, and so on. Although I think from a North American perspective, a lot of the big public pension funds are now talking about ESG much more credibly and sustainability as well. We also see quite a lot actually in the Middle East, where we're talking about advancement of women in the workplace and tracking things like those types of equal opportunity measures. But you're right, we're operating from a different starting point. I think we could probably point to the Nordics as being the leading lights when it comes to ESG and sustainability.
Yeah.
So yeah.
Yeah, great answer, thank you. And Mark, maybe I'll come to you on that. As Aaron said, so many potential data points, but we're still data poor. How are investment decisions, in your opinion, being impacted by this challenge?
Yeah, I mean, in the case of the whole ESG, I see it very much similar to how people then dealt with the AIFMD and compliance 5-10 years ago, where they're struggling to come to terms with what ultimately is their strategy. And I think in terms of investments, it's looking at the ESG as being another point as being part of the due diligence. So what is it that you actually want to do with the company? How is it that you want to grow it? You want to have new markets, you want to have new investments, you want to open up new shops, you want to have various different areas, but I think the ESG will also be a similar sort of consideration, where as part of that due diligence, you look at the supply chain. You see what are the various different issues. You look at it from a strategy perspective of how it is that you want to improve things. Is it in terms then of in the case of economics, is it a case of you want to reduce waste? Is it a case of that you want to have for social, that you want to have better employee retention, or you want to have equality in pay? It's figuring out what those various different rules are and devising a plan and saying to that particular company, just like how we want to see you grow your revenue, just as we want to see you increase the number of shops that you actually have, or that sort of data areas, you want to then have them capturing that particular data that says, okay, well, how are you to do with equality in pay? How what is your energy consumption? And it's exactly the same as in certain particular areas where you could say, well, we want to reduce the amount of paper waste that we have. And you could look at it and go, hey, great, we've reduced the amount of paper waste that we have by 20%. But what you've realized is that now, rather than throwing away all the paper, everybody's now retaining it because you've got the wrong goal.
Yeah.
So it's very much then down to the firms to properly articulate what the rules are, what it is that they want to actually then achieve.
Yeah.
That will then give them the data points then that they need to then actually then capture, rather than going out and saying, okay, we now want every single data point, and then hopefully we'll find something in there that is improving, which we can then go out to the market and say, hey, look, we've done really, really well here.
Yeah.
I think you need to articulate what your strategy is in that particular.
Yeah, great answer. I think you're totally right. Yeah, some data points easier to measure than others, but does that mean the harder measurements are the ones that are being left behind, maybe, or?
I think what you have to do is you need to figure out what's right for the company. It's exactly the same as how you're developing it. I think if you only ever go for the easy options, ultimately it's not going to be sustainable. So I think you've still got to make then those hard particular decisions and go, okay, well, if it is that we now need to source a completely and utterly different provider from wherever it is in the world because they are using child labour, then I think the company then has to make that particular assessment, and yes, it may have an impact on the costs, therefore it may have an impact on profits, but you then look at it from a marketing perspective and go, hey, look, we're reducing it here. Yes, our product is now going to cost more, but it has then this particular advantage. So you can bring it all together into one particular story, I think.
Yeah, definitely.
Yeah, I would agree with that. The point about measurement, just going back to that, there's really for an asset, the only way to really understand their ESG risks and things like their emissions is to really dig into the supply chain and go full scope 3. And I think for most organizations, that's going to require a significant consulting engagement to understand the legal entities, the offices, and the full structure of the supply chain. So, but I think as a first step, proxying to an indicator is a decent first step on the way to being able to do a full supply chain assessment. And also if we think about an investor standpoint, and we're talking about being unable to report data, understanding that your portfolio company cannot report accurate emissions is itself a really good data point, because then you understand kind of the discussions that you need to have from an operating partner perspective with those companies to enforce positive change. So not being able to report is as good as being able to report an estimate.
Yeah. Great point.
It tells you something,
Absolutely.
Is that engagement something that is generally dealt with in-house in terms of getting into that data within portfolio companies, or is that something you would work with a third-party provider on, perhaps?
I see that as a combination. I think there are funds which are leading this, there are entities that are leading this foray in terms of being more ESG aware and insistent on how they're going to measure. So they have, I think, probably gone farther ahead in terms of BlackRock itself is driven by the fact that their investment strategies are very heavy and ESG driven. So they would have invested far ahead in what they want to see and what their priorities are, to what Mark mentioned. But you see an evolution of data suppliers, and you would find more and more coming out of that. And I wouldn't easily, I wouldn't call it the Bloomberg of that, but you would soon say somebody who's going to put out data in the ESG world, and it's multidimensional, right? So it is going to change a lot of things as this becomes bigger and bigger in terms of the whole data management, data collation, technologies that used, investment patterns, lending patterns. I'm going to see a lot of.
And I think what Chitra said in terms of sort of the service provider of being able to actually have all of that data. Once again, an investment manager is going to look at it in terms of their investments, their philosophy, their strategy, their way forward. And I think, in the case of service providers, they're going to see that across a number of different clients, and therefore, perhaps you'll see then the growth of indices. In the case of service providers, then being able to anonymize then that particular information and give sort of terms of reference that says, hey, look, you've decreased your your waste of paper by 10%. And you think, hey, that's absolutely great, but the service provider is able to turn around and say, well, on average, everybody else is doing it by 15%.
Yeah.
So therefore, maybe you shouldn't be screaming from the rafters just as much because you're not doing as well as what everybody else is doing.
Yeah.
And I think then that's what you were saying in terms of being able to actually then gain those particular sources of where the market is in these particular areas.
Yeah, we need to measure first and get to a point where we've actually got some data.
Yeah, we're capturing it first.
Yeah, but creating benchmarks, absolutely, and being able to compare either during the monitoring process or even during the diligencing process, ESG credentials as, factors of investment, that's certainly where the industry is going to go.
Definitely. And Mark, you made a great point there just about the number of indices. It's myriad indices out there, ESG, but this being consolidation as well in terms of a lot of the data providers. Do you think that will accelerate the process of collection?
Ultimately, that will happen over time.
It's early
But I
days.
think it's very, very early days. I mean, I think that's, you're at least 10 years away from that, because people have to try, people have to fail, people have to understand where they've made mistakes, and then it will ultimately then come out. But do I see that as a potential trend for the future? Yes, but I think immediate reaction is it's far too early for that.
Yeah, definitely. Chitra, if I can come back to you on, I guess, the point about granularity of data, which is super relevant to ESG, but maybe just zoning out for a second or zooming back out for a minute, and talking about different streams of data coming online all the time, internal, external. How are people adding that and using it to create value within their business models? And have you got any advice really on firms that are trying to get into that granularity?
Yeah, data is distributed in multiple geographies, multiple systems, multiple, kind of data points that are there. And I think the problem at the surface is obviously being able to assemble all the data. That itself is a bit of a challenge. And then is the interpretation of the data and how deeper you need to go in order to make this. And it's a simple example of saying your carbon emission, whatever parameter that you want to look is you go back, look at your supply chain, you look at a lot of other parameters, and that's when your granularity starts giving you a more meaningful output. So yes, it's very easy to say, and it's absolutely right to say, more granular the data, the better your analytics will turn out, you better your decision-making points will come out, but in many parts of the industry that is still in the works, and it's a direction that everybody will go and would want to go. So I think there are layers to peel to how you
Definitely. Mark, maybe on that granularity point?
Yeah, I mean, from my side of things, the analogy that I tend to use that I hope will stick in people's minds is if you're going to build a sandcastle, you have to start with sand.
Yeah.
If somebody asks you to build a sandcastle with a whole lot of rocks, you've got to break it down first. And I think what's the important thing is then that you actually have the right type of sand, the right type of data that you're actually capturing, and then you can build it into whatever ultimately it is that you're actually then looking for. I think that's where we're coming from.
Perfect. Great analogy.
the cues coming from there.
I can see that. Yeah, we've got time for one more question, I think, before we finish. Maybe just a forward look, if that's okay, just a quick view from each of you. If we could just talk about trends really, or prediction for the future. Aaron, I'll just come back to you. Do you think we're still going to be having the same conversation 5 years from now, or?
Yeah, I think the trends are clear. There is certainly a trend toward more data granularity, more outsourcing, and more consolidation and interconnectedness. My hope is that we actually manage to, in private capital, move beyond some of the historical hurdles and challenges that we faced in terms of data and how we're reporting to each other. But certainly I think the direction of travel is we're going to see much more granularity, you're going to see a lot of ESG data, and you're going to see probably regulatory changes around, as retail becomes much more in focus for private capital, we're going to see a lot more regulatory requirements around this.
Yeah. Great point. Chitra, quick for you, just what tech trend do you think is going to have the most
Increasing
impact?
complexity,
Increasing
regulatory and compliance needs, and that will come in, and that will drive data and other things that will happen. So I see the complexity and the demands around that increasing, outsourcing, co-sourcing becoming a way of trying to cope with those changes, and it's going to be dynamic. It's going to keep all of us busy one way or the other next many years.
Yeah. Mark, do you want to wrap us up with a final thought?
Yeah, I mean, I think sort of to bring it up into a bow, I think
Yeah.
what happens is that companies need to go out and they need to think, they need to ask themselves 6 questions. And it's really sort of, why am I capturing the data? So, what is the strategy? Who actually needs to do it? Is it being insourced? Is it being outsourced? Is it being co-sourced? Is it a partnership? What sort of information? So what is the granularity that the people need to have? I think they need to think then about where are they actually then going to capture it? Is it your Excel, or is it more sophisticated systems from that particular perspective? When, insofar as what are the processes? And I suppose if that's the 5 W's, then what's the H? So it's how. Is it actually the structured information, or is it the unstructured information? I think they're the sort of questions that companies need to look at to have an answer for, to be ready for the future.
Yeah, perfect. Okay, great point to end on. I think we'll leave it there. Thank you, Aaron, Chitra, Mark. Look forward to, if anyone wants to catch up with the panelists after, I believe you'll be floating around for a drink upstairs maybe, potentially.
Yeah.
Thank you.